Everybody, good morning, good morning, good morning. Welcome to the morning show here on Stock Market TV. Spencer Israel, JC Parets. Steve will try to join us today. He's having some technology issues with his camera, so he's working through that. And if he can figure it out, great. And we'd love to have him. What else we got today? We got Kenny today, as always. We have Sean because it's Thursdays. Got to talk options with Sean, and we have Matt Werder on the show. We will be talking all things call, commodities, tariffs and their effect on those markets. So save your cold questions, everybody, for 9 o'clock because Matt Werder's coming on. He is ready. As far as what else is going, we got a lot of stocks that are like moving, like real movement this morning, right? Some stocks that are gapping down hard. Roblox down 20%. Skyworks Solutions down 27%. Sheesh, I don't see that every day. Hey, Peloton. Look at you, Peloton. Up 16%. Good job. I don't know what's on JC's radar. Let's find out. Smash the like button for me, please, before we go. Thank you very much. Let's do this. What? What's up?
Are we good? Are we good?
Wait, I can't hear you. Is it me?
Are we good?
Oh, no, we're good now.
What are we doing now?
Yeah, there is a delay.
Yeah, I was trying to get my computer to do too many things at once. It just doesn't work that way, Spencer. Doesn't work that way. How's everybody doing this morning?
Story of my
we got
life.
the right mic? We good? We are set.
I hear you.
We are set. It's a bull market. It is. Man, there is. I was listening to a podcast yesterday. Bill Gurley and Brad Gerstner. They do like this like BG squared thing or whatever, and like, you know, this sort of podcast a little above my pay grade. But I try to tune in every now and then. You know, maybe I'll learn something. And one of the things that I heard yesterday they were talking about was Bill Gurley, the Texas guy, and he was like, it's the first time in his career, and he's older than I am. He's like, for the first time in his career, he's talking about how, you know, 24/7, you could dig into the internet or a podcast or get a conversation, and you're going to pick up something new, and you're going to learn something new that you didn't know before, and you're going to get some insight that you didn't have before. And that really hit me, because this is somebody who probably talks to more people than me, has more experience than me, has probably been digging into this sort of stuff longer than I have, and he's going out and saying that, and I was like, damn. I mean, I couldn't agree more, but I'm coming to this from a much less informed, much less experienced perspective. So I thought maybe it was just me. Wow, I'm learning so much these days because maybe I'm just dumb. But now even someone who, you know, more proven and smarter than I am, more experienced, saying the same thing. So now I feel less dumb. And I guess just sort of reiterates the type of environment we're in. You know, I think somebody said, you know, it's been said a lot over the last, you know, couple months that, right, like, years go by, right? What is it? Years go by. What, you know?
Like a year. Nothing happens for a long time, and then like a year happens in a week or something.
Right. Like a decade happens in a week, and then a decade goes by without nothing happening, right? Something like that.
Right.
This is that, right? Like, and it really is a fascinating time to be around. You know, I'm friends with a lot of civilians who have absolutely no idea what's actually happening out there, which, I mean, I can't imagine being one of these civilians that's completely out of touch with what's happening. I don't know whether to like respect that, be like, good for you. Like, wow, that must be so liberating. Or be like, wow, how are you not watching the show that's happening? You know, like, how do you guys feel about it, chat? Like, is it a blessing to be like so aware of all of these things that are happening and learning so much? Or do you think it's, you know, something to be said with just completely tuning out all of it and not having any idea what's actually happening in the world? Like, what do you guys think? I don't know. I'm digging it, but this is me, right? I'm digging it. What about you, Spencer?
You know what I've been thinking about along the same veins? I've been wondering about this, like, prior to the, you know, we have so much information, obviously the internet, blah, blah, blah. But prior to this, like, go back 34 years ago, when you didn't have all this information at your disposal, like, what did people even talk about? Like, at dinner, for example,
They
because
read the
now
newspaper. They read the newspaper.
I I guess, but, like,
No, not guess. That's what they did.
just talking about markets, for example, you had 2 prices. You had the opening price and the closing price, and those got printed in the paper, right? And that's pretty much all you had, right? And then you had, like, just way less stuff in your face always, and I'm just like, we're being bombarded with information 24/7, and we talk about it because it's there, but when it wasn't there, what what did people talk about? I
They
don't
read
know.
they read more books and they
I
read the
guess.
newspaper.
Yeah, sure. Yeah.
Well, that's what they did. You asked the question. That's the answer. I'm telling you. Which is one way to go about it. For me, I think that we have always, not just recently, but we have always done a good job of sort of eliminating the noise and focusing on the things that actually do matter, right? Like we're not gonna like pretend that this like Fed speech is like the most important thing ever. Like, right? Like we know that are other things that are way more important. Like we're not gonna pretend that like this, you know, jobs number Friday is like the most important jobs number ever. Like we're not in that business, right? There's a lot of people that are in the business of distracting investors. Like literally, like a lot of these TV networks or all the TV networks, they're literally their number one job is to distract investors from what's best for investors. That's it. Period. End of statement. They are professional distractors. Facts only. Sorry, you may have gone to an Ivy League school. Your job is to distract investors. Our job as investors is to make money, right? See the difference? Our job is only to make money. That's it. I don't care. I don't care about you, Spencer. I don't care about Strazza, Daniel, Ravi, Dawson, Bill, Harminder. I don't care about what you guys are doing in your portfolios at all. None. Doesn't matter one bit. I only care about myself. I'm going out there looking for opportunities to make money to help me and to help my family. Period. Right? Now, I find the conversations that we have and the insights that we have, like with Warder. Warder's coming in here. This dude knows more about commodities and natural resources and coal than I will. This guy's forgotten more about those things than I will ever learn. Right? So,
Mhm.
me, these conversations are very valuable. And the fact that we have a community on here, all of you guys together, learning together, we all win. We all win. The portfolio accelerator that we had last week in New York City, where we had 30 people, 40 people, whatever it was, how awesome was that, right? And we're all in there for our own selfish endeavors. We're all in there trying to learn, trying to share ideas with one another. Why? So that I can make more money for me, so that Dan Ives can make more money for himself, so that Stephen Whitesell can make more money for himself. But the power of doing all of that together in a community like grows all of that knowledge and wisdom exponentially in my experience, right? As being entrenched in this community for so long, I can tell you for a fact, and it's not just an American community, it's global. So get out there, go to Singapore, go to Hong Kong, go to Brazil, right? Go do what you got to do. Go to Dublin. Go to a pub in Dublin and have some pints with the local traders there. Guarantee you'll learn something. Guaranteed. Anyway, that's my spiel.
No, it's a very good spiel. I can't help if like you're rubbing off on me or if it's just like my natural evolution, but I definitely have noticed in the last, I don't know, 6 to 12 months. I've always been a news guy, right? I went to school for journalism. I like the news. I like reading the news. I like following the news, and even I've just gotten like so over like a lot of the things that I read now. I'm just approaching with a much more cynical lens. Like did I need this? Did I need to read this? Like was this good for me? And a lot of times I'm like, it's this. I didn't need this. I didn't need that article. I didn't need that headline. It was just noise in my life.
Well, just,
And
I think to
so
your point,
I don't
Spencer, I
know.
think it comes back to understanding the motivations of those who create the content that you are thinking about consuming, right?
And I approach it with like a glass like half full mindset, which is like I do, but yeah, sure, there are people out there that are just trying to capture my attention for 2 minutes, but also there are people that are really trying to do good work, and I believe that, right? But that's just my own personal
But
bias.
here's the thing, they might legitimately be trying to do good work,
Yeah,
but their bosses won't let them because they have to meet a deadline and their headlines
That's
aren't
true.
provocative enough, and
Yeah.
the articles are not as frequent as they need to be to increase the bottom line, because their boss has a boss who has a boss who has to answer to shareholders, right? So even someone with good intentions who wants to quote unquote help people won't actually at all. In fact, what ends up happening is that people with that are motivated to help people end up just hurting people badly. Like, and then ultimately they just become numb to it, and then it just becomes malicious. And every day they wake up thinking, "How can I hurt people the most today?" Right? And that's what happens, right? And that's reality. And it's not that I'm like a cynic, because what is it Jeff DeGraff said? Right? If it's okay to be it's okay to be cynical, but if you're always a cynic, that just makes you an asshole, right? Right?
That yeah, I agree with that. Pretty.
Great quote.
That's
It's a
pretty
great
good.
quote. But listen, I've been on every news network that exists. I've been quoted in every publication that exists. I understand the way it works. They're not here to help anybody. Facts. They're only there to help themselves. By the way, as they should, because their family is more important than me and you, right? That's just
They
what it is.
they
So
call it feeding the beast. You got to feed the beast. The beast never sleeps. All right, let's talk markets here. State of the markets.
do it.
What's
Do it.
going on?
All right, all right. We got the Dow futures this morning doing absolutely nothing. 45,000 flat for the Dow. S&P 500 futures up 8 handles to the upside, just below 6,100. NASDAQ 100 futures also flat. Literally nothing happening today. 21,750 for the NASDAQ 100 futures. Nothing in equities. Moving on to the bond market. Nothing is happening in the 30-year bond futures. Literally flat, just above 116. Crude oil up 40 bips, 71 and a quarter. Copper up 17 bips, 445. Nothing happening there. Gold down 0.33%. Just under 2,900. Silver down 1.5%, 32.50, with the VIX back under 16. And over in funny money land, of course, we've got Bitcoin up 2,000 points. That's almost 2% to the upside, 98.5. Ethereum just under 2,800 flat on the day. Solana 200 up 1.5%. And total crypto market cap, Mr. Spencer Israel,
Mhm.
$3.17 trillion in
Okay.
market capitalization.
I like it. I mean, I'm just seeing a lot of green this morning. Not
Dollar
everywhere.
index bouncing a little bit this morning. Russell 2000 futures kind of outperforming some of the other indexes. Nikkei up 0.25%. You got the German DAX futures hitting new all-time highs, by the way. So not only 6 stocks are going up. German DAX futures all-time highs. Shout out Germany.
And the FTSE. Did I say that right? FTSE?
FTSE is definitely stronger than Fitzy.
FTSE all-time high.
Like he's some Irish firefighter in the Bronx. Fitzy. Is Fitzy coming in today? Right?
Yeah. Okay. All-time highs there too.
Yeah, a lot of these areas that we're bringing up just don't have any technology exposure, right? Germany has 1 tech stock. United Kingdom has 0, right?
I mean, I'm sure they have like 1, but yeah, point taken. It's not a large.
If you add up all of the technology stocks in all of the
Yeah.
London FTSE 100, it all equals to less than 1% of the index. So
yeah,
that and 0 is the same, right?
Sure. I'm with you.
Dollar got slammed over the last few days. Just an FYI, a little bit of a bounce today. All eyes on the Canadian dollar, Mexican peso, Brazilian real, Chilean peso, guys.
All the things from yesterday's show.
Needs to be front and center, folks. Front and center. So this crap about the Trump or the crap about the tariffs or, whatever. They're suing the Ivy Leagues because they got men in women's locker rooms. Like all that stuff don't matter.
What?
Don't matter.
I don't even know what
matters here is the Chilean peso. You heard it here first, folks. You heard it here first.
All right. Where do you want to go? We have a bunch of earnings that we can talk about.
Why don't you tell me? Why don't you tell me, Mr. News Guy? What should be on my radar? I'm telling you what's on my radar.
All right. Chat's talking about MicroStrategy. Is this the top, JC? MicroStrategy is no more. It doesn't exist. MicroStrategy is gone. Forget it. Leave it. Erase it from your mind.
All right, dramatic.
It is now just strategy.
Can you throw up slide 3 there?
MicroStrategy, as far as we're concerned, never even existed. It is now just strategy. And is that the top? Oh, and
I mean,
nice logo too.
I honestly, you took the words right out of my mouth. I was gonna say, love the logo.
Yeah.
I don't know what Micro had anything to do with this. Maybe it was something with whatever business they were in 25 years ago.
Yeah. I don't know.
Strategy with a B. I mean, that's what it is. So I think that this is more, I think that this is more, in tune with what the company is doing, right? Just strategy with a B, right? Like, yeah, that works.
Yeah.
Yeah,
Yeah.
that makes sense.
All right. I thought that was funny. But not actually meaningful in any way, shape, or form. I come in this every day, and I just like Kenny. The first thing that I do is I look at what's gapping up, what's gapping down, and I see a bunch of stocks gapping down this morning. I mean, Roblox on their report getting lost down 17% now this morning. So yeah, I mean their sales came in light, and I think there was some weak guidance as well for Roblox. The big loser of the day is Skyworks Solutions, SWKS. Their CEO is leaving. Their revenue is declining, and I think the actual numbers were okay as they compared to estimates, but their numbers are going down year over year. And like I said, the CEO's out, so I'm not gonna speculate as to again. It comes back to what we said yesterday. It doesn't really matter why a stock is up or down. It just matters that it is, right? So it's down 27% this morning. So whatever they said, Street doesn't like it. What else jumps out to me here? Look at a couple forgotten stocks doing pretty well this morning. Sonos. Remember Sonos? Remember Sonos had that disastrous software upgrade like a year ago when the CEO got fired. Anyway, it's up. What are we up today? 20% on their report. So good for you, Sonos. Do we have the calendar funds? I think we do. Can you bring that up? I think we have it somewhere in the deck.
Ooh, Fonzarelli back in the saddle after gallivanting throughout North America.
Yeah, right, exactly. Oh, so I forgot to mention Eli Lilly. They also reported this morning, and of course Amazon is the big one tonight. So that's kind of what's on my radar. Eli Lilly is up. What are we up this morning? Barely flat, basically unchanged. So yeah,
All right, can we
just
get?
a lot of earnings on my radar. We got a lot going on. Honeywell, I think this was their last report before they split the business up. Right? Remember they're doing they're spinning off the.
No, I don't remember. Can you fill me in on what's happening there?
Yeah, Honeywell is copying GE's playbook, right? And they are. Oh no! Oh, that was news from today. My bad. That was actually announced today. They are spinning off the automation and the aerospace business. This is going to happen by the second half of next year. So they're going to divide into 3 different companies. It's Honeywell Automation, it's Honeywell Aerospace, and then it's whatever the heck the remainder of their business is. I don't even know. But
I wonder, and Strazza always says never. I don't know about never, but I wonder when some of these tech companies, when they're going to start doing this, and my suspicion has been that when they start doing that, it will be towards the end of the cycle.
yeah,
Right?
yeah. I mean, it's a good question. The obvious difference is that tech companies are asset light companies, and industrial companies are not. They have all this industrial
Property, plant, and equipment.
Yeah,
Come on now. Who remembers from accounting class?
exactly. And it wasn't always this way. Obviously, there's a reason we have conglomerates, is because that's what Wall Street rewarded for a very long time. They don't reward that anymore. But yeah, it's a good question, JC. I've also thought about this. I've wondered if the government will be the catalyst for this. We don't. It won't happen during this administration, I don't think. But maybe a future one. It's a very good thought. These companies we've discussed this a number of times. These tech companies are basically 15 companies in one. Their reach is so large. Yeah, I don't know the answer, but there will probably come a day when these tech companies are going to be forced or incentivized in some way to start spinning some stuff off, and that will probably be towards the end of the cycle. So when it happens, I don't know. It's gonna be weird because Google, for example, they have the other bets division, which has uh, we don't even know how many companies are within that unit, but it doesn't make any money.
Do they call it the other bets division?
Call it other bets.
Really?
That's their Hail Mary department,
I love
and
that.
the revenue from the cloud and the advertising funds the other bets division, right? So it funds the Hail Marys. So without that, I don't know. It's going to be it's a very interesting question. I don't have the answer, but if it ever does happen, it'll definitely change the equation for tech companies on Wall Street because right
That's
now they're basically they are the new conglomerate. They are the new GE and Honeywell and whatever.
before we get to Kenny, I want to go through a couple of slides here. First of all, this Nasdaq chart. I was looking at it yesterday, and I'm just very simply, does this look bearish to you? Like does this look bearish to you?
100.
So this is the equally weighted Nasdaq 100 index. Anybody in the chat? Anybody in the chat? Does this look bearish to you? Like it's not like this like earth-shattering like revelation that we're describing here. It's a Nasdaq 100 equally weighted. Just very simply, does this look bearish or bullish? I mean, I don't know. I see us breaking out of a monster base, huge consolidation throughout most of last year, breaking out to new all-time highs. I don't know. Doesn't look bearish to me. I don't know. Ladies, gentlemen, anybody want to weigh in on this? Just, very simply. Moving on to my wife's favorite country. Favorite country. My daughter asked her yesterday. She goes, Mommy, what's your favorite country? And my wife looks at me and smiles and she goes, probably Italy, right? You know how many times I tried to take my wife to India with me? Guess how many times she came with me? Woo, 0. But if the trip was to Italy, she would have been there in a heartbeat. So my wife never been to India. Love India. My favorite country. I mean, I love the Mediterranean Sea generally, and Italy would be in there. Greece would be in there, right? Spain, south of France, like all that stuff. Of all of those, I don't know what's my favorite, Italy or Greece, maybe. I'm not sure, but my favorite country, I think, is Japan. I think Japan is just. If you've ever been to Japan with me, I mean, I can't take the smile off my face. I just can't. These Japanese, man, shit, they do not mess around. And then so that's Italy making new highest level since the great financial crisis. Just an FYI. A lot of financials, by the way. A lot of financials. And I wanted to throw up one more chart and then we'll go to Kenny. This one here, this has got to be probably the most important chart.
I love the idea that if you're investing in Italy, you're investing in a bank that's like 500 years old, right? Like Italy and the UK, they have these banks that predate America, which I think is cool. But anyway,
does that get you excited?
A little bit. In America we have Birkenstocks, right?
You took the words right out of my mouth. You have Birkenstocks. So when you walk into the New York Stock Exchange, which Spencer and I just did a few days ago, like as you're like walking in, they have like these like gross, like old Birkenstocks, right? Like I feel like they were worn. Like it was pretty gross, right?
Yeah. Well, I don't know if they're gross, but
it was pretty gross. It was like somebody's gross feet were in there. You know what I mean? Anyway, shout out Birkenstock. Older than this country by like 2 or 3 years, something like that.
Something like that.
So they're the oldest publicly traded company, but they just went public like last year or something, right? Which is hilarious. All right, last chart. Then we'll go to Kenny. Slide 4, please. There, Spencer Israel. This one, folks, right here. This is it. This is it. This is for the kids right here. European banks, highest levels since the great financial crisis. You like apples? How about them apples, huh?
I do like apples.
What do you think about that, Spencer Israel?
Yeah, between this and the other one from yesterday, the dogs of the GFC, I mean, you're getting me interested in markets I never thought I'd be interested in before, right? So, but then of course, that's 1, 2, 3 tops in a row. So is this just resistance again? I don't know.
I don't think so.
Okay.
I don't think so. Not with this kind of breadth. And what I love it is when you have broadening market participation, strong market breadth. And then you got all these people telling me that breadth is weakening. Oh, JC, you're not looking at the charts, bro.
No,
Yeah,
JC,
okay.
come on. That was like a month ago or
They're still
more.
telling me that. They're like, oh, collapse, JC. The crisis is here. The crisis is coming. You'll see, JC, you perma bull. You'll see.
Yeah, well, there's people have very different feelings about the economy. The economy is based on vibes and nothing else, right? The
The
market,
economy.
the market is based on price. The
When are,
economy is
when are
based
people
on
going to
vibes.
realize? When are people going to realize that recessions are a choice for most of the people
Dude,
that
why
matter
do
the
you
most?
always say that?
It's true. Recessions are a choice for most of the people who matter the most to the
Oh
market.
my God. Okay. Whatever.
Facts only.
Sure.
All right. Bring 'em
Kenny,
out.
bring him out. Bring him out.
It's been a long time coming. They ain't cuffing my clock, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Woo!
What's up?
Well,
He
Jefferson.
doesn't have their own bullhorn. My bullhorn's broken, so my birthday's next year, but I need a new bullhorn.
So we were down on the corner of Wall and Broad.
Down on the corner. Yeah. What's up?
And we were all there last week, and I was telling the people stories of Wall Street Jesus and how Kenny would go on to next to where George Washington is doing the Dougie, right? Like in the whatever that it's the Federal Hall.
Yeah.
And is that the blowhorn that you would use?
No, I don't need a bullhorn. But that was the bullhorn from Occupy Wall Street when me and Josh Brown were walking around harassing people.
I was there for that. I remember. That was so good, dude. Patasetta was there. Shout out Patasetta.
Those were fun times. The funniest part is I would trade and then I'd go out and protest what I just did. Yeah, down with those traders. Down with Wall Street. Yeah, those are fun times. But yeah, tell me what you're saying. Yeah, we were down on Wall and Broad.
No, it was just people didn't believe me. They're like, Kenny would do that. I'm like, have you met Kenny? You really don't believe me?
We're going back. I still got the white suit. I did change the name. Wall Street, the Jesus Christ of Wall Street was pissing some people off, which I mean, I like when I piss people off, but I changed it to the Prophet of Profit, which was kind of cool. Yeah, I made a couple of good stock picks in 2012. I said, hey, the Fed just took over the market. We should go long, even though it was bearish. I made my first solar pick right there. We named it effing shorts left and right, FSLR. And by the way, right now I just sold out of my
effing shorts left and right.
I just sold my Roblox, so you may now enjoy the fruits of your labor. I stink. I'm in the Roblox right now, and I just sold it at the worst price. All right. Anyway, yeah, you know what? I was just talking about you again. One of the young buck amongst us was talking about BlackBerry.
And which young buck? We have a few young bucks.
The guy that was talking about BlackBerry he came on. I think it was the second morning. He was sitting in the corner, and then he was sitting next to me. I forgot his name. Sorry if you're out there,
Rick.
But
Rick.
I think so. Yeah. And he brought up BlackBerry, and he's like, "Is this an Andy Dufresne?" I was like, "Absolutely," and he nailed it. Look at his chart. This is the last couple of days. Wham! BlackBerry.
Throw it up. So Slick Rick, new to the team. He is our in-house Lebanese Mexican guy.
No, not that guy. This guy.
Not that guy.
No. He had to be the youngest kid there. Plaid shirt on the second day. Anyway, he was the one talking about Dave. This crazy stock, which was absolutely an Andy Dufresne, the sickest one. I don't know where has that stock been in my whole life. He WGS, I think, was one of his also.
Yeah,
nailing it.
This is Sam. This is all Sam right here.
Yeah. So when he mentioned BlackBerry, I was like, you know what? I think you got something here. And look, you actually had a pretty good move over the last week. So I can't believe I'm even talking about BlackBerry, but I love this kid. What do you
mean? This is right up your alley, Kenny.
Yeah, that's what I'm saying. That's why I'm a fan of the Roblox. I was a fan of the Roblox because that was an Andy Dufresne special, but it became an Andy Dufresne into the Jerry Orbach. So you just broke out of the Andy Dufresne, and here, let me just stretch it out a little bit more so you could see it. Well, you kind of see it right here, just wallowing in the muck in this 15-point range, and then it came out and you exploded, and now you just gave it all back, basically to the breakout where we are today. But this is our trade. Again, give me a disaster and I'm involved. I came in late. I wasn't here. This would be the original place where I would have bought it. I bought it in this chop, came out of the chop a little bit, but bought a little bit more there. And then when it popped again, I sold it. And then I sold the rest right here. And it looks like it was a bad sell on that last pullback. But, I'm not going to complain, making some money. The pre-market's a little bit more volatile, especially on a stock that reported earnings. But, so far so good. Looking at Qualcomm, looking at ARM this morning. So, I think we're going to have some fun. Qualcomm sitting below the VWAP, ARM sitting below the VWAP, looking at buys for those. What's called AMD was kind of a difficult trade yesterday, but, inevitably you got the perfect trade out of it. So here it is, my friends. Lots of chop on it, but once you came out of that chop, blue line to the orange line, and that's the algo that we love. And speaking of algos, we're talking to Nos, and he's this thing's working. So very excited for what we got going on.
We need to have a little team meeting, you, me, and Mr. Nas about some of these alerts. This is moving a lot faster than even I anticipated.
Yeah, because it works. Yeah.
To use up. Funny feeling.
I'm pretty excited. Yeah. And yeah, that's a bit. So hey, listen, guys, if you're free, you want to guys hang out tonight, I'm opening up the room. We're going to be testing the new software. We're going back to my old room, the Pro Trading Room software. So I want you guys to start kicking the tires. If you haven't, email me directly. I'll get you a link. All right. Just to
send me the link. I'll swing by tonight.
Yeah. Okay.
What
yeah.
time?
Definitely.
What time?
8 p.m. 8 p.m.
Yeah, it's like past my bedtime, bro.
Oh, yeah, I know. You got 3 kids now, right?
I was in bed by 7:30 yesterday.
Oh my God. Jeez.
I feel great.
I was just having sushi. I haven't gone to sleep at 7:30 in a long time.
Well, your kids are older.
Yeah. I know. My kid went to the Georgia game. She's having the best time. She got to see a winning game yesterday. That was a good one. But listen, yeah, so tonight I play some Grateful Dead music for the first couple hours. If you come in and we're just playing music, that's the show. And then I come on around 8 o'clock. We're going to crunch some numbers, talk about the chip stocks, talk about the Qs, and just, have a good old time. And by the way, if you're in the Roblox, thank me for selling it. There's the 6250. Yes. Now you want to know how to really make money? I sell, you buy, everybody wins. Have a great day.
Adios. And just
right.
like that, Mr. Kenny Glick.
There's Kenny's email up on the screen. If you want to, he's talking about the schmooze tonight. This is his Thursday night schmooze. He does email him /us, and we'll figure it out there. If you want to get in. All right. We have Matt Werder in the house, and you guys, this was a specific request. I don't remember if it was JC or Steve. One of you guys, maybe both you guys, actually, may have been both you guys, said we need to get Matt on the show. It's been a while. It's been like, I don't know, 9 months since we spoke to Matt, and a lot's happened. So I got him. Ask and you shall receive. He's here.
Bring him out. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Mr.
What's going on, buddy?
Porter. How are you, my man?
How you doing, buddy? I'm doing good. We missed you a couple weeks ago.
Oh, I know. I was going to head down, and then all these flights were canceled, and they had me going to Atlanta, and I was going to get stuck in Atlanta. I was like, I'm not doing this shit. I'm not doing it. So
Understood. You were missed, though.
Oh, no, I appreciate that. I would have very much liked to be there. For that sort of stuff, I feel like guilty not being there, to be honest with you, because I always learn things. But let me just rewind here. For those of you who don't know Matt Warder, Matt and I, we met. Where the hell were we? I think we were in Old Alexandria the first time we met, I think.
Yeah, that's right. At one of the local
so we were having some drinks, and as you can imagine, like I have people that come and talk to me about the markets quite a bit, and I just assume that nobody knows anything and everybody just sucks, right? Because that's just my experience. Like, rarely do I come across somebody I'm like, oh shit, this guy's really smart. So Matt is one of those, right? So Matt is talking to me about the market. I'm like, who's this fucking guy, right? So he's telling me about this and this. Like, as the conversation went on, I was like, this guy, This guy, I think he's on to something, right? So nevertheless, we've been friends ever since. And I want you to know that you don't suck, Matt. You don't suck at all.
Thanks, buddy.
I think you're well versed in the industry, very well connected, and you are part of the family. So just friend of ours, folks.
Hey, man. Well, I appreciate it. I need all the friends I could get at my advancing age here. But, I mean, the thing about this world is, like, we're not going to be right 100% of the time. I certainly wasn't last year. I'm certainly not going to be this year. But it's a process. So you iterate on everything and, hopefully get things, right 60, 70% of the time. And that's, about as best as you can really hope for.
All right. Enough with the pleasantries. Is this a commodity super cycle or is it not?
Man, it's the word super cycle kind of hurts me, right? Because super cycle implies this rapid increase in demand, and we really don't have that. What we have is a kind of unwillingness to finance new supply. So it's a little different. It's a supply shortage relative to demand that kind of wants to incrementally increase. So super cycle, I don't think is the right word, but if you just want to say we need to finance some more mines for pretty much everything, then I'd be on board with that. You know what I mean?
Don't cop out, Matt. That's not what we brought you here for. It's not what we brought you here for. I'm seeing gold making all-time highs, right?
Yeah.
Gold making all-time highs consistently is not something that we see too often in commodity bear markets, right?
No. Well, I mean, on the gold side, in my eyes, that has a lot less to do with, commodities than it does with just, general fiscal malaise, that's going on the government side.
Yeah, I was just telling you how smart you are. I think you're wrong. What about copper and gold? When you zoom out on charts of copper and gold, Mr. Warder, go out decades, they look exactly the same. So if we have gold making new all-time highs, are you going to sit here and tell me that copper is not going to do that?
No, I'm not gonna say that. The same reason gold is going up is the same reason that copper is going up, and that's we don't have enough relative to where demand is. Now, gold is mostly investment driven, so that demand can change pretty quickly. But with regard to copper, we're electrifying everything, and we're not financing these large new operations. I think over the next couple of decades that sentiment will switch. But right now, supply is constrained enough that if demand inflects to the upside, there's not enough supply to really swing out and satisfy that.
Matt, in the short term here, are you worried at all about tariffs or a trade war, or is that just noise to you?
That's noise, right? And that's one of the things I wanted to talk about was, I spent a lot of my time forecasting what prices for mostly coal markets are going to be off into the future. And what I learned during the last Trump administration is stop trying to predict things. It's more useful to be able to react to what actually happens and run scenarios off of new information that you kind of replace in your models in a Bayesian sense, and you continually update things. And I think that's going to be a more useful skill set going forward than just, the price of X is going to be Y in 6 months. I don't think that's how analysts like myself need to go about our business. Honestly, I think it fares better for chart technicians and folks who are more kind of focused on trending price action. I think that's going to be a more successful approach to navigating the short term probably than me sitting here with supply and demand and in a cost curve and trying to figure out where the two are going to cross.
Yeah, but at the same time, how do you react when the market reacts to every flippant headline that it sees, right?
I mean, on my end, I mostly have to address that with sizing. I can't get really too big in one particular thing if we're going to be subject to this kind of volatility going forward. So I have kind of strong views held loosely with regard to how the market is going to move from one day to another. I do think we're in a relatively positive period for commodities. Going into this year, I was pretty long power demand that got almost erased in one day with the DeepSeek announcement. Like, well, we're not going to need power plants in the future. And then here we've reversed. just in the span of a week. So like you have to, when something happens in the market, you have to go back to the original thesis and see if anything has really changed. If we're believers in Jevons paradox, then we're going to use more AI compute, not less, if the cost of compute goes down. So
Hold
that
on,
doesn't
who's
mean
this
that we're not
Jevon
going to use
guy with his paradox? Who's this guy? Can you explain that to us,
Jevons
mere
paradox.
mortals?
Sure, yeah. So like the easiest way for me to explain it is like with energy efficient appliances. So like back in the 70s, we're like, well, we need better appliances so we can save on energy. And we made these, appliances have gotten really efficient to use energy. And instead of us using less energy, we use those appliances more. So energy demand rose instead of flattening because we used more of it because it cost us less. Like at the end of the day, people, they make what they make and then they kind of spend most of that for the vast majority of the country. So if you save on power demand, you're gonna make up for it somewhere else. And the same thing is going to be true with AI compute, right? So eventually, like when the cost of compute comes way down and we build these big data centers, we're just going to have more compute capacity. And I think we'll wind up using about the same amount of energy. Now, all these stocks, the power stocks, the hyperscalers, they all ran up on the speculative demand of like 3% power growth per year. And now they're like, well, maybe it's going to go back down to like 1% or 1.5. It's still growth. We still need to build out power capacity in order to do that. So I'm still pretty constructive. But last Monday was, deep breath moment, to say the least.
Yeah, I mean the last couple of weekends, if you put on, turned on social media at all, like it was just like the market's gonna crash. Oh my God, this is the end of the world.
Yeah.
And we come in Monday and they just buy them, right? That sort of sentiment, to me, is bullish, right? That's that proverbial wall of worry, right? That we're seeing. But let's stick. I want to stick with the commodities theme here.
Sure.
You've seen what happened in like coffee and stuff like that, and some of these moves in cocoa and OJ and just monster moves throughout commodities. You're seeing what's happening in gold. Let's stick with the metals right now. When is platinum going to start to participate in this, right? So gold is doing well. Silver's been acting well. Platinum's just been a big nothing burger. What sort of relationship does platinum have with those others? Is it just like a higher beta play on those? Does it eventually get going? Is it like a later stage part of the cycle kind of asset? Like, how do you think about platinum?
Well, I mean, so platinum is a little bit more like silver. The way that my friend Rick Rule used to analogize is first, the gold price goes, then, the majors go right behind them. And then usually that's when silver starts to get going. But platinum is like a third leg of that trade. And it is very different from gold in that a significant amount of platinum goes to platinum heaven. So we use platinum in catalytic converters for the auto industry, for instance, and mostly to build catalytic converters.
For those catalytic converters that I'm always hearing about, I don't know. You strike me as much more of a car guy than me. I thought palladium was the big catalytic converter thing, or is it both?
That's for gasoline engines. That's where I was headed. I was like, if you want to be constructive on the platinum group metals, I'm actually probably a little bit more constructive on palladium, just because I think the transition to electric vehicles that was touted for the past 4 years is probably going to happen at a much slower pace. And we're going to probably need more palladium that's involved in the market. Now, if the Russia-Ukraine war ends and they don't have to sell all their PGMs to China in order to finance the war, a lot of that material from Norilsk could wind up on the market and kind of put a damper on the entire sector. So I'm mostly sticking with gold and silver. Silver at the moment is kind of on this level, I think like $32. I think it's going to retest 35. I don't see any reason why it wouldn't. I think it'll just follow gold up. So like, yesterday I bought calls on SLV, bought the levered AGQ ETF. You could consider, one of the Torquay, mining shitcos like Kerr Mining or something like that to kind of play the upside on silver. But I do think it's going to catch up. On the platinum and palladium side, I mean, you can probably, if I had to pick one, I'd probably just buy the palladium ETF at this point. But you could make a case for, Sibanye Stillwater, a company I don't really dig the mines for, but if platinum does get going, that'll be incredibly
That's
torquey
the
to the
pure
upside.
play. That's the pure play in the equities market for platinum.
Yeah, exactly. I mean, not the greatest minds in the world by any stretch of the imagination. You know, a lot of them are underwater. But if platinum goes, that's the one that everybody's going to express that trade through. So, you know, you'll see a lot of options activity. You'll see a lot of buying on that. So they'll trend together. If you watch one, you know, I think it's safe to chase if one actually breaks out. I was telling Spencer actually beforehand. I think this is a year where, you know, forecasters like myself aren't going to have such a great year. I think this is a better year to be a market technician and kind of, you know, constantly agnostic and analyzing momentum and trending price activity. I think this is going to be a much more constructive year for guys like you than it is for old supply demand fundamentalists like myself.
Yeah, I couldn't imagine living that way, man. I love you for it, though. Let me ask you this. All right, so we talk about precious metals. Before we move on to base metals, we have you, so I'm gonna take full advantage of the fact that you're here. We're going one by one, baby. So let's go. How high gold? How high by end of the year?
I think we break 3,000 for sure.
We're fucking 2,800.
Yeah.
I mean, give me a real number.
3,500.
All right, and before this cycle's over, how high?
Before this cycle's over, I mean, I think we can see $5,000 gold pretty easy. I think you can. I mean, if you go full Austrian school, you can make a case for 10,000. I mean, it's at the end of the day, it's all arbitrary. But it's like how bad is
Austrian?
How bad are currency markets going to get? I mean, I don't know how to answer that question. So for me, it's just like number go up, smooth brain buy gold, leave it alone.
And so gold at 5,000 puts silver at 120.
Something like that. Yeah.
Yeah, like get to 100 and then exceed it, kind of spill over 115, 120.
Yeah, I mean, I hate those headline numbers because you know, you can't. If that happens, there are way worse things going on in the world.
You think so?
Yeah, I think so. Yeah,
why?
It's good. Well,
didn't gold go from 200 to 1,900 and the world was perfectly fine?
Yeah, I mean, gold is reacting to geopolitical uncertainty right now. That's what it does, right? When things get uncertain, gold goes up. You know, did that during the first Trump administration. You know, you think about things that happened during that period, 2016 to 2020, starting off with Brexit. I mean, Brexit, precious metals absolutely ripped. And then you had, you know, a couple of like weird flash crash, fat fingers. But by and large, we've had a consistent bid in precious metals for nearly the last decade. And I don't see how, if you're, you know, a foreign country, for instance, that has US dollar denominated debt and the dollar ripping like it's been ripping here for the last few years, I don't see how you don't hedge with gold at that point in time. You don't own.
No, I like what you're saying here. So you're not thinking as an American, you're thinking about other countries. That makes a lot of sense.
Like the better that the dollar does, the worse that dollar denominated debt performs, and the more risk it gets attached to those countries. So it's not just about us. This is like the whole gestalt, the whole shebang. You kind of have to think about it all at once. It makes my head hurt. That's why I prefer supply demand. Much easier.
No doubt. Great question from the chat. Billy Cunningham coming in asking, how long is this cycle? Correct me if I'm wrong, Mr. Warder, but these commodity cycles historically don't last for a year or 2 or 3 or 4 years, but they last for a decade, 2 decades. So if that were the case, we're not even a quarter of the way through this. Do I have that right?
I mean, for the precious metals, those cycles last a very, very long time. If you go down more into like the base metals or the industrial metals, things like that, like steel runs on a 5-year cycle. Those businesses are very lumpy, right? They're lumpy in the course of the year. They're lumpy in the course of a 5-year, 10-year period. You know, you have a period where mines get financed and then come online, and then there's a bust and everything resets. But for precious metals, I mean, this is largely a function of sovereign largesse, right? So as long as we're going to remain fiscally irresponsible at the sovereign level, I think precious metals are going to catch a bid both from the institutional side and from the sovereign side, and it behooves us not to own at least a little bit, despite all of our new Bitcoin reserve currency sort of advocates.
Is that going to happen?
I mean, I never say never, right? We've got David Sachs sitting in Washington as the crypto czar. Who am I to say it's not going to happen?
I mean, the fact that we even have a crypto czar, regardless of who it is, right? I mean, it could be you, but the fact that we have one, right? That's the thing.
Is it weird and scammy? Does it feel like that? Yeah, it kind of does.
Does it?
but who cares? I mean, if number goes up, right?
As long as I'm getting paid, I'm good for it. I'm good
Right,
with
right.
it.
I mean, we don't have to be like, have a worldview about it. You just, is it happening or is it not? And I think the answer right now is, yeah, it kind of is.
Strazza is giving me a hard no. Strazza's like, there's no way that they're gonna do this, and I was like, yeah, I think they will.
I mean, if I probably share that view, just personally, but when I step into this chair and watch the screen, like I have to put all my personal thoughts aside.
Right.
I don't know what the answer is going to be. Like, would I advocate for it personally? Probably not. But like, I'm not in charge. So
Dude, they're definitely doing it. That's a very ignorant opinion. I have no basis for that other than the fact that I'm just observing. It seems like that's what's going to happen. Okay. Moving on. So 10 more years of this cycle? Yes.
I mean, I think what we've seen in industrial metals is we've seen the peak of the cycle back in 21, 22. Prices went bananas. Now we've come off that for a couple of years. I think 2025, 26 marks the bottom for a lot of those. I think we'll see met coal prices bottom here over the next, call it 12 months. I think we'll see copper prices establish a very, very firm bottom over the next 12 months.
That 4.5.
The copper chart.
Where,
I mean,
where are we headed?
It's
6 to 8 copper?
Yeah,
6 to 8
copper's basing around 4. I think it has a functional kind of upper limit in the low 5s. Substitution over to aluminum. Aluminum's also a conductor, and when copper gets too expensive, I don't think people are, 100% copper driven. They'll do what is most advantageous from a cost perspective. So I think 550 is kind of a functional short-term ceiling, and after that you'll see empathetic movements in aluminum.
Give me another base metal. So we've been buying aluminum here. Is that the move?
Yeah, I noticed that.
Nickel or tin?
Tin is another really interesting one. So there is a conflict going on in the Congo at the moment. The Rwandans have invaded from the eastern border and are moving through Goma. And one of the
I did not know any of this. I was not made aware.
That's why I'm here for it. And one of the largest tin operations in the world is up in Busy. It's about 8 hours away. That's run by a company called AlphaMin Resources, AFM.V, and it has taken a beating. But this is like 7% of the world's tin supply. So, let's just say that the rebels actually do make it up there. They do take control of the mine, or they seize it, or whatever. You're going to see a massive move up in tin because, tin is like the glue that holds integrated circuits together, right? It's solder. So if 7% of tin supply comes off the market, tin prices go bananas. And the two beneficiaries, AlphaMin, assuming that it doesn't fall victim to the coup, but also there's a company called METALSX that trades along with the beta of the tin price as well, which is MLX on the Australian exchange, and then Cornish Metals, CUSN, I believe. That's another one.
Metals.
Yeah. I mean, those are the three that you basically play in that sector. If I have to pick one longer term, I'd rather take the risk, go to Congo with the best deposit, and own AlphaMin. That's what I own. But similar to when gold gets moving, you buy gold, you buy Agnico Eagle, you buy Lundin Gold, you buy all the best performers. You just kind of buy a basket of stuff and don't necessarily worry about it. But yeah, tin is one that I think will have a pretty solid few years, just on integrated circuit and AI demand increases alone. Copper is going to do fine. I think aluminum is going to do fine. Uranium has kind of lost its luster a bit, especially following the DeepSeek news, because we don't need as much power. But spot prices come off a little bit. I've owned Cameco for like 2 or 3 years. I've owned that, and I've owned the Sprott Physical Uranium Trust. Those have been my two bedrocks in that sector. I think it's probably okay to sort of start to position on a pullback. We just have to watch power demand. If power demand goes in the toilet, then uranium's not going to do well. It's all dependent on that. Same thing with thermal coal, right?
Let's transition into the oil and gas, right? You're talking all these alternative energy sources and everything like that, but the big elephant in the room here, big components of the Bloomberg Commodities Index, the CRB Commodities Index, is oil. oil, heating oil, unleaded gasoline.
Yeah.
You know, the XLE, which is the energy sector index, is still below the 2008 highs or right at the 2008 highs. It was 17 years ago, bro. And
Yeah.
we're still below those levels.
That's
So,
right.
and you and I are old enough to have traded those markets. So we can
We
tell
are.
you how great it was for oil and gas stocks at the time.
It was a banger. I mean, that's
was
when I
great.
first kind of got into markets. You know, I first got my job at Wood Mackenzie, which was a big oil and gas, worked on the coal side. But you had to absorb all that knowledge in order to have functional conversations with people across teams. So
Let me
it was
ask
an
you
incredible
something,
time to
Matt.
start. Yeah.
Why do all these McKinsey guys always flex that they worked at McKinsey? What's the story there?
Oh, I didn't work at McKinsey. I worked at Wood Mackenzie, which
Is that not the same thing?
No, different company.
Oh, so why do those
no.
McKinsey guys always flex that? Like the people that worked
Well,
at
it's like-
Goldman
it's like-
Sachs. I worked at Goldman
it's-
Sachs.
Yeah, it's like an Ivy League degree. You know, if you go to Harvard, you don't not talk about going to Harvard.
Yeah. Like
you know,
Anthony
same way-
Scaramucci, every time the mooch says Harvard Law, you take a swig and you'll be fucking hammered by the end of
Oh,
his
by the end
presentation.
of the day, yeah. I mean,
Yeah.
oil. So
Shout
like,
out Mooch. Get Mooch on the show. Spencer.
I'll be on that show too. I like the mooch. He's all right.
All right. Dude, hilarious.
Oil, I think, is just kind of here. You know, we're going to be somewhere between $60, $75 a barrel for the foreseeable future. I don't think, drill baby drill is really going to happen that much. I don't, I think, Trump is wielding tariffs as like a bullwhip rather than I don't think he's going to put tariffs long-term on our allies, but you never know. I mean, if he does, then, it's long U.S. production, probably short Canadian production, at least for a little bit. I think that's destructive for the industry. We need Canadian heavy crude to come down to the refinery so we can make the kind of the right suite of products that we need here domestically in the country. So, I wouldn't do it, but again, like, I'm not in charge. We just react to it. But I don't think there's a big move up or a big move down for oil. I think we're just kind of locked in this range. Most of the analysts I follow, Rory Johnson, Mark Rossano at Mark FNY is a great follow for all things oil and gas. But they're kind of saying the same thing. Like we're stuck between $60 and $75 a barrel. When things are bad, we'll head toward the lower end. When things are good, we'll head toward the upper end. So it's a swing trade commodity, I think.
And what does that mean for the oil services stocks, right? You had the ripper off the lows, off the COVID lows, when after crude oil traded below zero, you had the ripper into 23, and then it's just kind of been this digestion. So for me, I see that wave one initiation thrust pulling back, wave two getting set up for that monster wave three, but we haven't seen any such wave three behavior here. Do you think that it could go on that way, like I just described?
I think so. Yeah. We aren't going to not drill. And I think when those companies sort of base, like if you look at the rig count, I think the rig count has sort of come down and it's kind of establishing a new base. So what we want to do, I think, going forward is kind of look for those opportunities and start to get long positions. The oil field services is predicated on how much we produce, how much we drill. And if drilling activity is going to increase over 4 years, which not 100% certain, but certainly rates will go up. So at the very least, I think we'll probably get some appreciation there, if that makes sense.
Jason doing some camera stuff here.
Gotcha. Yeah.
All
right.
Sorry, I'm having some camera issues. I don't know.
All good.
why.
Matt, before we let you go, is there anything? I'm looking at the chat. Is there anything we haven't talked about that we need to know right now?
I mean, you guys got the world's only independent coal analyst on the call. We haven't talked about coal. I feel obligated to pitch.
Damn it, you're right. Wait, we talked about it a little bit. No, right.
I mean, I mentioned it, but I just put out thecoaltrader.com, thecoaltrader.substack.com just put out our thermal and met coal outlooks for the year. From a pricing perspective, it's going to be, I think, not such a great year, but like I said, I think over the course of 25 and 26, the coal industry and coal prices are in the process of bottoming, and we're going to move into a period of really tight supply as we head into the back half of the decade. So this is a good time to put them on your radar. It's a good time to start kind of learning about the industry, understanding who the players are. And of course, we talk about, the biggest companies in the sector, which on the met coal side, right now in no particular order, AMR, Alpha Metallurgical Resources, HCC, Warrior Met Coal, and NRP Natural Resource Partners are kind of the big three. There's Ramaco Resources, METC on the ticker, and a handful of others. On the thermal coal side, we're mostly looking at Core Natural Resources, CNR. I'd be remiss if I didn't mention Peabody Energy, BTU, which just
Can I ask about that?
Yeah, just digested a huge acquisition. They bought Anglo's coal mines for a whole lot of money. It's puts them in a difficult situation because the investment thesis there has been predicated on shareholder returns. Now they kind of don't have enough money to really do that over the next few years. So I think it's from an investor perspective, probably more a trading vehicle, a way to play the beta of coal prices over the next couple of years. And by the time we get to the end of the decade, 2028, I think we'll have a pretty good idea as to how well they'll digest those assets. And if the answer is they're doing well, then I think BTU is a back half of the decade play that'll be a monster return.
Outside of coal, because you just nailed that, and this BTU just literally got cut in half.
Yeah.
What's the commodity that we need on the radar in 2025 that maybe most people are not paying attention to?
I mean, we mentioned tin earlier, but I'm gonna go ahead and stick with precious metals. Like, I don't think that the change of administration has taken out the sovereign risk that exists globally. I think more and more companies are going to have to, more and more investors are going to have to pay attention to to the yellow metal and incorporate it in their portfolio. And I think the more sort of, I don't want to say defensive minded, like gold is a defensive stock. I mean, the dollar's ripping, it's ripping. Stocks have ripped too. They can all go up at the same time. I think that's kind of an underappreciated point for people, but it's just insurance, and it's trending in the right direction. So just own it. And I think on on the producer side,
don't get cute. But do you own the metal or the companies?
If you own the companies, I would own the lowest cost companies. So that's companies like Lundin Gold, LUG, Agnico Eagle, AEM. Those are the companies I want to own over someone like Barrick or Newmont or whatever. Just the lowest cost is going to be king as we go forward, because those are the margins that are going to accelerate the fastest.
I mean, how many gold stocks do you know that are making new all-time highs? Look at Agnico. I mean, that really stands out to me. I mean, I'm a relative strength guy, so it's hard for me to argue against that.
Yeah, right. And again, like, these are really good management teams that are running the operations really well. When you're in this commodity cycle where like gold isn't in a bear market, sort of like they're not looking at the commodity space right now, right? You mentioned saw you guys tweeted out about healthcare, been one of the best performers so far in 2025, and that was left for dead. Yeah. So, like, I think this is a year for biotech, right? Our friend The Shrub has written about it in his blog. Citrini Research has talked about the biotech this year. In his 25 trades for 25, there's a whole litany of companies that have drugs that are coming out that focus on rare diseases, which is a really interesting theme that he has outlined in his work. So I'm interested in things like that. I mean, I'm certainly not an expert on any sector other than the commodity space, but when I see those types of ideas and they resonate with both fundamentalists and with market technicians, that's when I really start to perk up and pay attention to it.
All right, I got one more question for Matt. Matt Warder, what is more difficult to do? Hit a professional curveball, play the guitar well, or make money in the market?
Hit a professional curveball. That's got to be it. And you can make a lot of smooth brains making money in this market, buddy. Ain't too many people can hit a 12 to 6er.
And the guitar somewhere in the middle.
Guitar is something. It's an investment in time, right? Guitar is a compounder over time, but you got to have some serious chops to mash a pro curveball.
All right. I'm dying to learn how to play the guitar. I've said that for 20 years. I still, I have a ukulele that my kids have that I play, and it's really bad.
Got to start somewhere, buddy.
I know.
Matt, do you have a water buy before we go?
A water buy? No, I haven't done any work in the water space, unfortunately.
Dude, you're like the only commodities guy that doesn't give a shit about water. I love that about you. These
It's
commodities guys love water.
it's never worked. I mean, that's the
Never,
problem. No,
never
like,
worked.
so like, is this time different? Well, I don't know. Like, is there, from a supply demand perspective, do we have some water problems? Yeah, the reservoirs in Kansas are drying up. That's a problem. I forget what that reservoir name is. We had a couple of years ago, one of the lakes in Nevada was, damn near dry. Like we were seeing like boats that were sunk by the mob, like, pop up, bodies that were, sunk there for eons. So yeah, we have a water problem, but like, what's the best way to express that? I don't know. Honestly, gold is probably just as good an expression of long water as anything else.
Sure.
Listen, Matt, I know you got to go. We've taken a lot of your time, and I appreciate you for that. Beer's on me. Freeport Macaron, flip the book long right here. Let's go.
Let me pull it up. I can't say for sure without actually looking at the stock.
Pretending like he didn't have that pulled up this morning already. Come on.
I mean, we got to see if it's going to. They've got earnings coming up, I think. So if they have a bad earnings moment or whatever, we should dip down below 35. Yeah, I think that's probably a buy right there.
Wait, ladies and gentlemen, Mr. Matt Warder, give it up for him, y'all.
Thanks a lot, Matt.
Guys, thanks for having me on.
Adios.
All right, my water plays are short avocados and short almonds. Those
Dude, you can
things.
short avocados all you want. I will never be short avocados.
I'm just saying, as far as those things take a lot of water. Almonds too. Almonds are the real problem, actually. Not
long avocados all day, baby.
Yeah, I hear
part of the Perlman program.
I'm with you. It's a healthy fat. All right. We got Sean McLaughlin in the house. What else do we? Let me see. 9:40. What's happened in the first 10 minutes of the day? Anything interesting?
Nothing. Bonds
Nothing?
are flat. Bonds are flat. Nasdaq's flat. Dow's flat. S&P's up a smidge. Oil up, 0.2%. Copper flat. Gold down a little. Volatility flat. Big nothing burger in the market so far this morning. Little bounce in the dollar.
As they say, tis early. All right. Sean, are you here? You want to come on? You want to do this? All right.
What is up, boys?
Nothing. Just talking a little commodities with Matt Warder. No big deal. You ever meet Matt before?
I have not, but I enjoyed what he was saying about Agnico Eagle Mines because
because you're long.
Yeah, I'm long and I'm liking it. It's
dude, how many gold stocks are making all-time highs, man?
The only thing that gives me pause is it's due to the structure of the options trade that I put on in AEM. It's actually moving faster than I would like it to. I want it to go up, but
the old calendar coming back.
Yeah. I want it to. I wish it would go up, but just go up a little slower. That's all. But I like it. I like the action we're seeing.
So we had a nice little team meeting yesterday. And we were sharing ideas, sort of a post-mortem of last week's, intensive, multi-day. I didn't like that you were like over in the corner there. We need you in a more centralized location on the next one, Sean.
I'm just hanging with my people, JC. My people need me over there.
Yeah, but I need you more. So I need you more centralized next time. Just throw. I was just thinking about that last night. And so, in our post-mortem yesterday, we were talking about a lot of the key themes that stood out. One of the things that Sean's been really stressing is, this whole concept of calendar spreads. I would love it if you can kind of explain, your thought process on that. You just alluded to how you wanted Agnico to go up, but at a slower pace. You want to discuss what you mean by all of that?
Well, look, one of the things about options trading is it's a little bit more 3D than just buying a futures contract or buying a stock, right? There's more factors that come into play that determine whether or not you make money. One of the big factors is timing, right? With options trades, timing is a big part of it, right? And one of the things I've been stressing coming into this year, and I continue to believe, is that the bull market is not going to look anything like the bull market of 2024. It's like we will likely go higher, but it's not going to be a smooth ride. And we've seen that already, right? We've seen fits and starts. We've seen, sudden dramatic drops, not only in the index level, but in just individual sectors and stocks. And it's going to be hard to be a swing trader and hold positions like I do. If I have a winner, JC, you know this, I like to hold it for 3 to 6 to 9 months if I can. But in choppy markets, it gets very hard to do that. So I'm approaching trades these days, especially my directional bets. I'm approaching them with a little bit more caution, and I'm using the options market to help me pay or help pay me to ride out the volatility, so to speak. And one of the vehicles that I like to use to do that are calendar spreads and their close cousin, the diagonal spread. And what I like to do is, let's just say I'm long, I'm bullish on XYZ, right? You know what? I can't say XYZ anymore. There's actually a stock called XYZ. Damn you, Block.
Stupid Block.
I know. All right. So an imaginary stock, let's say I'm bullish this imaginary stock and stock's trading $100 and I want to be an owner of the 125 strike calls, like 12 months expiration. Great. That's going to cost, some money. But I could finance the purchase of that call by selling shorter dated calls against it to, lower my cost of participation, bring in some income along the way. I could continue rolling those calls, bringing in some income, lowering my risk all along the way. And in trades or in trends that are slow to develop or that are choppy, those strategies can perform very well. We might not hit huge home runs, kind of depending again on timing on when the breakouts happen, but we're probably going to lose less in an environment where we might otherwise be getting stopped out repeatedly on long positions. So calendar spreads and diagonal spreads give me more flexibility, give me options. JC, I love to say that options give me options, and this is a great example of that.
Well, what I was explaining to All-Star Charts member earlier this week, actually, is that, they were asking me if, what's the better way to take advantage of a trend? Is it through the stock market? Is it through the options market? And my answer, I thought, was a pretty good answer. I want to hear your thoughts. My answer was like, if you're buying the common stock, what you see is what you get. Like, that's it. That's what you're getting. You're getting the common stock. The risk versus reward profile is whatever it is that the market's giving you. In the case of the options market, it allows you to manipulate the risk versus reward profile to meet your specific objectives, right? And risk tolerance and time horizon, right? So you're essentially manipulating it for what's best for you. So it's not so much one is better than the other as it is just different. And like you said, options give you options. How'd you like that answer?
No, I agree with everything. And a couple things I would add is that, if you're a stock investor and it's a stock that pays a dividend, okay, great. You're going to earn the dividend if you're in it for a long term. Probably not going to make or break your trade, but it's nice to get that income. But that's a positive. But a negative of being the stockholder is that it's going to tie up more buying power. And for some of you, that may not be a big deal, but for others who want to have a more diversified portfolio, if I could play that same stock thesis with an options trade that ties up a fraction of the buying power, then that gives me the ability to diversify my portfolio into other trades, maybe in other directions that would help, mitigate some risk that way too. So neither is bad, JC, you know that, but you hit it on the head. It depends on your risk parameters and your comfort and risk and how much capital you want to tie up. And they options give us options.
No, it's a great point. And one of the misconceptions out there is that options are risky. And my response is options can be risky.
Sure.
They potentially can be a lot riskier than common stock. Sure. But it could also be the exact opposite. Options can give you way more conservative positioning. In fact, you could set it up where it's too conservative potentially, right? So there's like an envelope, right? What is it called? Like envelope bands, right? So like it could get way more conservative, it could get way more aggressive, and everything in between, right?
Right. One final point I'll add too is that sometimes stock investors, they have their position, they want to be in it for the long term. Maybe they got a nice huge long-term capital gain on it and they want to keep that going, but they'll hedge their position by buying puts. Nothing wrong with that, right? They buy a put to protect a majority of their profits. Well, that put has a carry cost, right? There's every day that goes by that put is not in the money, it's going to expire. It's going to lose a little bit of value every day. It's called theta decay. That's a cost. Well, to have that same risk profile, but tying up less buying power, instead of owning the stock and buying a put, you could just own a call option. You're still going to have the same theta decay or similar theta decay every day, but you've got far less capital tied up and likely less risk. So, people say, oh, why would I buy calls? I'm paying theta every day. Well, it's the same as owning the stock and hedging it with a put, and then you have the same risk profile, but with less capital tied up. That's the other thing I'll add.
No, I think you nailed it with the capital aspect of it as well. It's not just about manipulating the risk versus reward profile, but even if you want a similar profile, you could just put up less capital.
Well,
right?
look, I mean, we have a perfect example today. Kenny was talking about it when he was on earlier. Look at Roblox. That trend has been unbelievable this year, right? And there's a lot of people holding stock coming into that earnings report. And they may have had a stop loss working in that stock, maybe 5 points below the market or 6 points below, thinking, oh, if there's a bad earnings report, I'll get stopped out and I'll lose $5. Well, guess what? They got their faces ripped off this morning. Nothing their stop loss could have done to mitigate that risk. Now, if I was in that same trend, long calls, at least I knew going in that the most I could lose was what I paid for those calls. And long call players fared a hell of a lot better this morning than the long stock investors today.
Yeah, no question. Buying call options, you're a limited partner in a hedge fund, right? You can't, the world could end. You still can't lose more than what you put in.
Absolutely.
Right. Any thoughts as we digest this lack of new crisis that we were promised this weekend and then promised last weekend also? Like, now that it's not a crisis, it's just normal market activity and volatility collapsing. Like, how are you thinking about the market?
Well, I don't know about you, but I can't wait for this weekend. I can't wait for the next crisis. I mean, this is getting to be fun, man. It's almost getting predictable. Everyone freaks out on Sunday, and then by Monday we buy it up, and it's all.
I know,
good,
but they need to start getting more creative. First, it was like the deep sack, and then this weekend it was what was it this weekend?
Trade war, man.
The trade war this weekend, right? What's it going to be next weekend? Like, LeBron gets traded, so stock market crashes. Like, I don't even know.
Could be the Middle East, JC.
Maybe they.
Oh my God, is there going to be some sort of disturbance in the Middle East? I can't believe it. That never happens.
China, haven't heard about them in a minute.
Maybe
right?
China could lie about something again.
I think maybe they abolished the Fed this weekend. Wouldn't that be fun?
I'm surprised that they still do the Fed thing.
You
in 2025.
Yeah.
Maybe they start announcing the farm payrolls. Could you imagine? That would be big news.
Speaking of the Fed, Sean, Sean posted a very interesting Twitter thread in our Slack the other day about a conspiracy theory involving the Federal Reserve and J.P. Morgan and the Titanic.
Oh yeah, that was a new one to me.
No, that's been around. That one's been around for a while. They were going to abolish the Federal Reserve. So JP Morgan.
That had me scratching my head. It had me scratching my head a little bit.
Dude, that's an old one.
I didn't know. It was news to me.
It was new to me.
That's like a standard Merkin, right?
Yeah, I'm not a conspiracy theorist, so I'm sure it's been around, but that's the first time I had seen it, and I thought that was pretty funny.
It was funny. I enjoyed it. Yeah. All right. Should we do some recess? Let's get out of here.
I think you just always make too much meat, always, and then you could just make tacos with the leftovers.
Are you thinking about your Super Bowl party this weekend? Is that why this is on top of your mind?
Dude, we got a house up in the Poconos for the Super Bowl, and then like all my kids, we got like pneumonia, and it was like a disaster. So my wife's like been trying to cancel it. So like she has not been able to cancel the Airbnb, so we get to go now.
Shout out Poconos. I used to do.
Also, I am still banned from Airbnb because of Giancarlo. And I explained to my wife, told her exactly what happened and how none of it is my fault. She doesn't believe me and thinks it's my fault.
There's got to be some kind of statute of limitations on that. Like, okay, you served your penalty, Airbnb. Let him back on the platform. JC's a good guy. We could vouch for him.
I walked into the house. I turned the doorknob and the doorknob fell off. 5 minutes later, I sit down on the chair and the chair breaks. Right. And then Giancarlo, when he left the door unlocked, and the wind must have like blown it open. So the owners must have walked in, doors open, chairs broken, doorknobs off. So they're like, this guy's donezo. But it wasn't my fault.
All right.
Yeah. Well, hey, shout out Poconos. I used to host a fraternity reunion in the Poconos every year for 10 years after college, and I love the Poconos. Good times.
Wow. Yeah,
Awesome. It's not that far.
Poconos are great.
An hour and a half, depending on where you're going.
Yep.
So my recess is I went down a Wikipedia rabbit hole last night, which are always fun, by the way. Do you guys remember LMFAO? They were in EDM,
Yes.
EDM rap duo.
They had those videos on Santa Monica Boulevard.
Right. Okay. So I learned first fun fact is one of the dudes is Berry Gordy's son. Berry Gordy is the founder of Motown Records, right? I did not know that. He was Berry Gordy's son. He's his youngest son. That was the first thing. And then, because rabbit holes are fun, I ended up on YouTube watching this video. This is a video of, his name is Redfoo. He is Berry Gordy's son. He was in this duo, LMFAO. He is into the market, and he was on Mad Money with Kramer. And I thought that was like the fun. This is him in a freaking like penny, whatever you call that, full sleeve tattoo on display, talking to Kramer about Marvell and ST Micro and Broadcom and Apple and Google, and that's his portfolio. And I thought it was great. It's
wow.
It's on YouTube.
What happened to that band? They were huge for a minute.
I know.
Tony Rock is in the house tonight.
Yeah. Oh, yeah. Actually, one hole. That's how this started, because I was reading about tennis, and this guy is also super into tennis. So that's kind of how this whole thing. That's how this whole rabbit hole started. And then I ended up watching an episode of Mad Money from like 2011. Fun fact. Redfoo loves Google, and he loves Apple and Broadcom and Marvell and ST Micro. I haven't thought about ST Micro in a long time, but yeah.
All right, look, I got a quick little piece of recess. This is proud dad moment. I'm coaching my son's basketball team. We are 4 games into the season right now. We're undefeated, demolishing people, and we're demolishing people in such a way that the league just sent out an email. We got it this morning. The league sent out an email, and I know this email was directly targeted at my team. They said, going forward in the fourth quarter, if your team is up by 10 points or more, let's not do the fast breaks. My team has crafted the fast break. Defensive turnover, ball down the court, quick layup, points. And
you tell that commissioner that if they don't want your team to score, then have the other team try to stop them for once.
Yeah.
Tell them like that. If they don't want you dancing in the end zone, don't let them get in the end zone.
They're trying to throttle us. We're too good.
Youth sports drama has to be some of the most cutthroat drama that there is.
Dude, score more and stick it to them, Shawnee.
Hey,
right.
We're having fun, man. I don't know the first thing about coaching basketball. I have a good assistant coach who does know basketball. So the two of us
working. Whatever you're doing,
time.
Sean, it's working, baby.
We're having a great time, man. And we're having a great time.
Sean, my coaching advice is to do what my dad did as our coach. He would just yell the whole game, spread out, spread out.
We do a lot of that.
Basically, the main advice I could give you. Spread out.
The big thing this season, though, is we've been working plays, like set plays, getting motion going and getting the post guys setting up screens.
How old is he?
10.
Yeah. Are you kidding me? They're 10 years old. You keep scoring. Don't tell. Yeah. Tell them to stop you. Yeah. 10 years old. These are adults.
That's right. And this weekend, man, we're very excited. We have a game Saturday. Following the game, the whole team, we're all shuttling down about 20 minutes down the CU Boulder. We're going to go to the Colorado Buffaloes game, and the boys are going to sit on the players' bench during warm-ups and through the national anthem. It's going to be very exciting. So that's great awesome. Basketball weekend.
Cool.
Tesla making new 2-month lows today, FYI.
Wow. Yeah.
Musk needs to give a little pat on the back to his boy and say, hey, help me out here.
Did you see Elon Musk's profile picture on Twitter?
No.
It says
I did see his new job title though. I thought that was pretty funny. White House tech support.
Yeah, that's his Twitter. That's his Twitter profile. White House tech support.
Funny.
I saw
That
that.
is
I didn't realize you had a new picture.
All right.
Yeah, that is funny.
All right, here's what we got today. Sean's doing the jam session at noon. Chart Request Live is at 1. JC and Steve are going to do a video at 4 o'clock, provided Steve's technology is functioning, which it should be. So I hear. That'll be about one of, if not the top team that they're seeing for this year and how they're going to approach it. We'll send out some emails about that, so stay tuned for that. Thanks to Matt Warder for hanging out. Thanks, Sean. Thanks, Kenny. We'll be back tomorrow morning for Crypto Friday, as always. And that's what we got. So smash the like. Thanks for watching. As always, here's the like button. Don't forget to do that. Right? It's a little thumbs up on the screen right there. It looks like that. And we'll see you guys tomorrow. All right?
Give us some love, guys. Give us some love. Feed the algo.
Feed the algo. That's right.
Keep feeding you. Feeding you.
Run it.